All right, welcome back to another portfolio update. As you can see, we are down 855 right now. Thanks to Jerome Powell yesterday, we were down a lot, about almost 6% of the account, 4286. 1 month, we're still good. We're up 1098. 3 months, 10,679. Year to date, 19,734. 1 year, about the same. And overall, up 88% at 32,133. I think we were up as high as, I don't even know if I can show you. Let's see. Does it show? Yeah, right around there. About 100%. 100, I think it was like 102%, the highest at close to 73, 74,000. So, yeah, with yesterday's news, the markets got a little funny. He did lower the rates a quarter of a percent. Then he had some things to say which the markets didn't like. So now this is where we're at. So we're down almost 1,000 right now. Not too crazy like yesterday, but it's still down. I think it's an opportunity to buy, but things seem a little unstable. So, all right, guys, let me get to the update on the portfolio on dividend income that's been coming in so you guys can take a look. I will do a detailed video like I do every month at the end of the month. So I'm just going to scroll really quick. We had Ford at the bottom there, Pfizer, Tesla with 1,200 bucks, JEPI 70, JEPQ, QDT that pays every week, Exxon paid, AGNC, Realty Income, Main Street, Microsoft's Yield Max, QDT again, SCHT paid, Google paid 20 bucks. And then these are the pending ones. And let me show you guys my option orders. I did the math today, and on options for December, I'm up about $1,000, so it's not bad. I'll scroll through so you guys can see. The big ones was SMCI, which I'll show you guys what my issue is with that right now, actually current issue right now. So we had a few good ones with them. So that brought us up, and I did get into this one crazy one, QUBT. It was kind of going crazy, so I did sell. Well, I bought a call, which I said I wasn't going to do anymore. At 340, then the stock dropped, and I was able to get out same day at 350. So overall, I made 10 bucks, but it got a little scary there. It had dropped all the way down to like 150. So we should check it out. What are they doing today? QUBT. Be careful with this one. Oh, look at that. So I had sold, I bought a call right around here. It, I think it was right here while I was taking off. And then, yeah, right around here. Then it did great, but it wasn't enough over what I purchased. It dropped on me. Then I put an automatic sell and it sold at 350 and then it just went down. Super crazy. So I'm glad I got out of that one. So, yeah, if you guys want to see, I'll show you real quick. Yeah, there it is. I got in 340 and then I got out 350. So it was a $10 profit. Luckily, I got out. I'm not, I said it before, I'm not going to do it anymore. I'm not going to buy any calls or any options. I'm not buying. All I'm going to do is sell calls and sell puts because I'm stuck on Home Depot. This one I'm down 218. Just a stupid one right there. And that was it. So let me get into the super micro. What are they called again? These guys, super micro computer. Let me see. Yeah, super micro computer. All right. So I own 200 shares on my put that I sold a while back, and I'll show you guys the history. Let's go down here. So down at the bottom, I had sold in November a put, made 182. Great. It expired. Then I sold another put, made 109, and then it was assigned at $34, right? That's the assignment right there. So I own 200. It was two contracts. I'll show you two contracts. So that's why it was 68. Then I sold a call on those 200, made 286. Great. Then I rolled it because it was at 41. All right, so I rolled it down to 35. I think it was 35. Yeah, I sold it to 35. Let's see real quick. I'll show you guys. I'm at, I think it's 35. Where is it at? Yeah, no, 37. It's at 37, not 35. It's this one. So I rolled it to 37. So I still have those 200 shares. Then at the same time, I went ahead and sold a put. And I did 5 contracts at 35, which made me 350 bucks. Now, the problem with that is this expires tomorrow. It's right here. Expires tomorrow, 5 contracts. It's $17,000 if I have to buy them at 35. Current price right now it's 31.49. So I'm down, as you can see, 1,400 bucks right there. So what do? Do I roll it? We could roll it tomorrow. And if we roll this one for, let's say, one more week, the cost right now is 360. And can I get it at 360 would be 34.50, so it's not worth it to roll it one week. I would have to roll it maybe 2 weeks, and I can push it to $34 strike price, or go out a little bit further and go to $33 a strike price, 380. I make, I don't know, 20 bucks each contract, so that'd be 100 bucks. And it's closer to the actual share price now, but it's still above it, so I would still get stuck with shares. I could push it all the way to January 24th and break even right at 31 strike. It's almost the same amount, so it cost me a couple bucks. Or even January 31st and go to $30 strike, break even, and not purchase the shares. So, what do you guys think? Let it exercise tomorrow at a price of 35. 5 contracts, it's going to cost me 17,000 of the margin money that I'm using. I'm not using my money, I'm using margin. So, do I let it roll? I'm sorry, do I let it exercise or assign, I mean, and get 500 shares of this and have a total of 700 shares because I already have 200, and then sell calls on the 700 shares next week? So let's see what it looks like to sell calls. It's not going to be accurate, okay? So let's say next week is the 27th. If we sell a call and I end up buying at $35, I would have to sell for a little bit more. Let's say we go to 36. I'm going to have 7 contracts. I'll make $244, maybe more, maybe less. I don't know. It depends on what Monday's price is. And time decay, obviously, that'll bring that down. So, what do you guys think? Do I roll it to about a month from now, or a month and a half, a month and a week or 2 weeks from now, or just let it assign and take the 200 shares at 35 and hope for the best that the price goes up tomorrow? I mean, not tomorrow, next week. Let me know what you guys think. I do have margin, and I'll show you what I have. I have option collateral 17,500 right now, and used is 20,000. So it's going to bring me up to 38,000 in margin. Now, one good thing is that since they dropped the rates, the margin right now is the margin rate is 5.75%. So I'm paying on the 20 grand, I'm paying $3.27 per day, which is charged monthly. That would double if I let that other one roll, so it might be in the $6 range times 30 days. What is that? 180 bucks, right? Yeah, $180 a month in interest fees if I tack on all that margin. Now, of course, as dividends come in, as I add money in, the margin debt goes down. So that's a question you guys have been asking. My individual cash is zero. That's always going to remain zero as long as I have a margin used amount. So that needs to be paid back before that cash starts adding up. So as dividends come in, it's not my choice. It goes directly to the margin debt. Okay. Money that I deposit goes directly to the margin debt, which is margin used. So you guys have been asking, do I get to choose where the money goes? No. Robinhood automatically throws it into the margin used to bring that debt down. All right. So, which is good. I don't mind because I can still use money, their margin money, if I need to go buy more shares as long as I have margin available. So, I need your input. Should I let it roll as far as assigning these five contracts tomorrow or push it out, roll it until next month? So, all right, guys, that was just a quick update on the portfolio. Let me know what you think. Put it in the comments, and I will talk to you guys hopefully next week. Thanks.